Has been a big week for Amazon. The company said earlier this week it's buying online shoe and apparel retailer Zappos.com in its biggest acquisition ever. Then yesterday, Amazon reported a 10% drop in second quarter profit and lower revenue than forecast. Well, joining me now to talk about Amazon is Sanford C. Bernstein analyst Jeff Lindsay. And great, Jeff, to see you in person here in our studio. Overall, I mean, was it I know there were some down points on this report, but what would you say? Is it respectable for Amazon?
Well, in the normal circumstances, it would be pretty good, but there were one or two items, in fact, one-time items, a very big currency headwind, and also a one-off item that hit earnings. Amazon reports GAAP, and so it had a $51 million write-down for its final part of the Toys R Us settlement, and that impacted the operating margins and then the earnings, and so that was a real negative.
Okay, well then as we get through these one-time items, then where are we going to get more clarity on where Amazon stands?
Well, I think fundamentally we still like the story very much. We just think the stock's very expensive right now. Ironically, this might open up a buying opportunity, which there hasn't been for quite a few quarters. And so, but fundamentally next year, we think as there's any economic improvement, Amazon tends to benefit disproportionately. There's a secular shift towards more online buying. That hasn't slowed down. And Amazon benefits disproportionately from that.
I mean, how did the stock get so ahead of itself? Because I think it was hitting a 52-week high right before these results, which, as you mentioned, a bit pricey.
Well, it started off the year with a short squeeze, and it kind of never really got back from there. People were shorting it into the new year, and on the expectation of a weaker economic environment, which was correct, but it got ahead of itself. Then they had the Kindle, then Kindle 2, and then Kindle DX, and I think the momentum just kept going. And now I think things are more or less catching up with them. The valuation looks very rich right now, and it looks like it may be time for a pullback.
Well, what about pricing for the products of Amazon? Do they have much pricing room at this point, or no?
Well, not really. None of the online players really have very much pricing power, because if you price high, the shopping engines quickly find out who's got the lowest price and they rapidly move on. But Amazon has a tiny bit of pricing power relative to other online sellers because it has such good quality customer service. And people trust it far more than many others. And so Amazon has a little bit of pricing power, but not much.
All right. Well, then what about in terms of the Kindle? Because we've heard a lot about it. It's a pretty popular product. But that flap recently over deleting the books off of the Kindles that customers use. What did that tell you about Amazon?
Well, I think Amazon were quick to refund the customers, but it does show you the inherent weakness of an electronic book medium, and that things can disappear, or authors can change their decisions about rights, and suddenly purchases you've made suddenly disappear. That can be very disconcerting for the consumer. Overall, it could also be a factor that Kindle impacted North American book sales and media sales, as did downloads and movie downloads, and that might be one of the a contributor to the weakness in the North American sales, which were down, and that's probably what investors are particularly reacting to. And
competition, though, on the e-book front from Barnes & Noble, Sony even, and eventually Apple, possibly?
Possibly News Corp as well.
Yeah.
I think Amazon really had a very good first mover advantage with Kindle. They were quick to recognize the space and very fast to move in. And now I think the publishers and the newspaper organizations are also realizing that it's a potential aggregator strategy, and they too should come to the party.
And the digitization of media products, I guess, because that's really still Amazon's core business, which is basically physically moving these products. How is that going to eat into their bottom line in the next few years?
Well, actually, it might go the other way. Digital media tend to be higher margin but lower top line. And so what you'll see is if there's greater digitization, what happens is you forego a high revenue DVD sale, or you forego a high revenue hardback book sale, but you make it up on much higher margins because you don't have the warehousing costs or the delivery costs. And so what you might see over the next few years is Amazon switch to a higher margin but potentially lower growth revenue model.
What kind of margins are we talking about?
Well, Amazon's margins are very low. GAAP operating tends to be still under about 5%. But what's very interesting, even in this quarter, there was a 50 basis point improvement. And I think what you're seeing is a progressive improvement in Amazon's products. When it enters product categories, its margins are very low, but over time they improve a great deal. And I think that's what people are seeing. That was masked this time by the Toys R Us settlement.
Okay, and Jeff, finally, I mean, where else could Amazon generate revenue? I mean, if it's not from selling these products, are there other ways that it could use its vast distribution network to generate generate some more revenue.
Yeah, I think there's probably no... fundamentally, Amazon's an excellent retailer, and I think what happens is it will add new product categories and will expand it in new markets overseas, and that's primarily the way it'll grow its top line.
Okay, Jeff, thanks so much for joining us on Amazon.com. Jeff Lindsay, Sanford Bernstein. Well, corruption in the Garden State, and also 24 hours after it began, California finally passes a plan to erase $26 billion in deficit. We're talking to State Treasurer Bill Lockyer about what is likely to be a controversial deal. We're back in 2.